Get Rich Slow with John Wolf. Hey, today I want to talk to you about what happened in mortgage lending in the last year and where I expect it to go. And this last year, 2020, man, it's been a year. It was really awful for many people, and I don't want to be too much of a downer, but I wouldn't be surprised if we could accurately call this, the worst year for humanity in the last 100 that didn't involve a major war. Thank God. And anyways, so at the beginning of 2020 and starting actually near the last half of 2019, lending was really opening up. And what I mean is there were rule changes that made it a lot easier for people with college student loan debt to purchase homes. There weren't laxes in the rules themselves, but the industry sort of went to a place of like assuming all of the paperwork and everything was good unless it was sort of proven to the contrary. And I think the best example of that is income and future income. So this is something that isn't back yet, although all these other things I'm going to tell you are. The previous to what happened in April, March, future income could be considered for home loans. And what that is like sort of like if you just got out of college and were offered your first job, or you were moving between jobs or something like that. If you gave me a letter from the HR saying, you were going to make this much and he was good to go, and then we would call and just verify with the new company's HR that, you were going to make that and they weren't seeing any problems and here's your start date, I could actually get you a mortgage home loan before you started. Before the first paycheck. And that wasn't necessarily too risky then, but the way that the industry started thinking about that changed. So what disappeared when things started to sort of collapse a bit in the financial world in March? So before that, there were all sorts of interesting, what they call non-conforming products coming out there. So we're talking about things like you could get loans on condos that weren't warrantable. You could get cool financial products like buy a couple fourplexes if you have enough money down with no income checked whatsoever, because the fourplexes, the loans would service themselves. You could get jumbo loans which weren't insured by the federal government. You could get 10% down jumbo loans. And the general documentary requirements for all the normal home loans, VA, FHA, conventional, USDA, while we definitely had to do the correct documentation, there was sort of an assumption that everything is good unless something proved not to be. And then maybe there'd be more investigation. And man, at the end of the March, that whole window just closed. And there was sort of like no assumption that things were going to be okay. So the biggest place that showed was in proving that somebody has income. And that makes sense when so many people are getting furloughed and laid off because of this crazy sudden rule change and market shift. So previously, I had to verify with somebody's HR department that they were still working there 10 days beforehand, and we asked them if there was an assumption of continuance of their employment, right? At the end of March, that changed from, okay, you got to ask 10 days before, you got to ask 3 days before, you have to specifically ask if the business has been affected by the furloughs or other lockdown measures, and you had to run an internet search to see if the company was closing stores or locations or anything like that altogether. And really, if any one of those things didn't come up roses, that was a huge problem, and there was a really good chance that was going to stop someone from buying a home. And if you're just starting shopping right now, or you're thinking about this intellectually, I want to take you to a place that happened with somebody I was thankfully eventually able to get a home loan for. But this is a real case. So there was somebody working at a dentist office, been working at a dentist office forever, had a strong income and employment history. And then in March, at least if you were here in Oregon, The governor more or less ordered them to close and more or less non-consensually had them non-consensually donate all of their standard personal protective equipment that they use all the time. It wasn't like special new stuff. And then almost immediately imposed new rules requiring like a bunch of more PPE than was previously required for a dentist to be used. And suddenly, basically that closed every non-emergency dentist visit. So, the employee was... Employers don't keep employees sitting in the office doing nothing. It's not good for them. It's not good for anybody. So when we have to ask like, hey, is your business affected? The answer you might get back is yes. And then they don't get a home loan. And this isn't like getting the pre-qualified. I want to be really clear. You could have someone who, when they got pre-qualified, they were qualified. When they got in contract to buy the home and put in their escrow money, they were qualified. And then, 3 days before closing, suddenly we find out a little bit of bad information about their potential not continuing employment, and we have to deny the loan until that change. And that's just awful. It's really awful. And I think it went beyond all sense in many cases. Like just to the example of the person, working in the dentist shop, I had no idea at that point how long there would be a disruption from that business, but just reasonably speaking, they've always worked at a dental office. A year from now, there's going to be dental offices. They're going to be open. She's going to have the same job. The need for that is never going to go away. And unfortunately, I don't get to make the underwriting standards from my heart. Often, I can fandangle a way through the rules so that when somebody should be getting a home loan, they do. But I don't have, carte blanche powers on every minute to do so. So anyways, the other place where it got really hard to get people home loans were self-employed people. And self-employed people are used to being thrown under the bus on this very subject all the time anyways. But previous to 2020, needed 2 years tax returns, and that was about all we needed to prove their income, other than maybe checking that their income had their business had some operating reserves, but pretty minimal. After that, in addition to like the operating reserves and the taxes and everything, we required a year to date profit and loss statement. Sometimes it had to be certified by an accountant, sometimes not. And if it looked like their profits were down from the previous year, sort of at all, they couldn't get the home loan, or they had to go past a bunch of other thresholds that were really hard to meet. And especially when you start this in March, and anybody who knows about the business cycle in general just knows that the first quarter of the year is not a time when most businesses make money. Most businesses make money in the late mid-spring, in the summer, some of them a bunch of money right before Thanksgiving time, and then Christmas associated. That's when most businesses make money. So especially if you do like a year-to-date P&L in April for a business, it almost always looks like they're not making as much money as the entire year put together last year. Anyways, what do I see for the future? So almost all of those changes have really thawed out, and we're really back to where we were. So if you're a business owner, I can just look at your last year or two tax returns, and I don't need a year-to-date P&L unless there's some other complicating factor, but just not as a matter of course anymore whatsoever. The one thing that is dead, and I think will maybe start to barely thaw out in the most conservative circumstances ever, is future income. So for the time being, you probably need your first pay stub with a job change, or you need to have at least you've actually started your first day and have, if you're W-2 hourly, the HR department can vouch that you did your first hours or day. And if you're, commission or a business owner, it's still not great. And I don't expect that to really change. But then on the loan products and what is available, pretty much everything has come back. So now there are totally jumbo loans, and jumbo loans sort of disappeared for a hot minute. super conforming. The less than super conforming, or they're jumbo, but they're not super conforming, like 10% down jumbos are totally back. The, I want to buy a fourplex with a down payment, but no income proof, that's back if the fourplex makes sense. And the non-warrantable condos, all of that's back. So really the lending world is basically back to where it was, except for there's not really anymore the assumption that all of the paperwork is good. Now you kind of have to show all the basic paperwork every time, but there's not sort of that like really insidious assumption that there was a problem that we had back in the late spring and summer of last year. So that's the good news there. As far as just other lending updates, like happens basically every year, the conforming loan limit has gone up quite a bit. I think it's just under $550,000 now. That's the kind of thing I Google and don't remember. But anyways, I hope this was super helpful and informative to you. If you have any questions, please reach out to me. It's john.wolf@htlenders.com. You can see that in the description as well. Have an awesome day. Smash that like button. Tell your friends. Bye.